Hey everyone, welcome back to Corporate Decoder. Today Atai Incorporated just filed an 8K announcing a major acquisition, and here is what it means for shareholders. Quick note, this is not financial advice, just my take on public filings for educational purposes. Eli Lilly is buying Atai Beckley Inc. for up to $3.8 billion, and while this sounds like great news, we need to look closely at how the deal is structured, especially with those special payout rights. This filing announces a big event, the proposed acquisition of Atai Beckley Inc. by Eli Lilly and Company. Think of it like a big company buying a smaller one to get its technology or products. In this case, Eli Lilly is acquiring Atai Beckley Incorporated, which is involved in developing treatments for mental health conditions, particularly those that are resistant to typical treatments. The deal was announced on the 16th of July 2026, and it's set to close after all the necessary approvals are in place. Now, let's talk about what this means for you if you own shares in Atai Beckley Incorporated. Typically, when a company is bought, shareholders get cash for their shares. Here, each share of Atai Beckley Incorporated common stock will be converted into the right to receive some cash plus something called a Contingent Value Right, or CVR for short. The immediate cash payment is set at $6.75 per share. This CVR is where things get interesting and potentially a little complicated. It is like a promise to get more money later, but only if certain future goals are met. For each share of Atai Beckley Incorporated stock you hold, you'll get one CVR. These CVRs represent the right to receive up to an additional $2.5 per CVR. This extra payout is split into three parts, up to $1 if a phase 3 clinical trial for a drug called VLS-01 starts before the 4th anniversary of the deal closing. Another $0.50 or $0.5 if a drug called BPL-003 gets approved by the US regulators and is rescheduled by the Drug Enforcement Administration, or DA, before the 5th anniversary. And finally, another full dollar, or $1. If VLS-01 gets similar US regulatory approval and DR rescheduling before the 7th anniversary of the deal closing. This acquisition also means changes for the employees who hold stock options or restricted stock units, also known as RSs. For stock options where the price you can buy the stock for is less than the $6.75 cash price per share, those options will be cancelled. Instead, the employee will get cash equal to the difference between the $6.75 offer price and their option's exercise price multiplied by the number of shares their option covered. They also get one CVR for each share covered by that option. If the options have an exercise price that is higher than $6.75, they'll be cancelled for no payment. For RSUs, which are basically shares you get in the future if you meet certain conditions, they will also be cancelled. In exchange, employees will get cash equal to the $6.75 offer price per share, multiplied by the number of shares the RSU was for, plus one CVR for each share. The deal itself is outlined in what is called an Agreement and Plan of Merger. Both Atai Beckley Incorporated's board of directors and Eli Lilly's board have approved this agreement. For the deal to go through, Atai Beckley Incorporated's shareholders need to give their approval. They also need to get regulatory approvals, especially from antitrust authorities, to make sure this merger doesn't create a monopoly. To help ensure the deal gets shareholder approval, Eli Lilly has entered into voting and support agreements with key people. This includes Atai Beckley Incorporated's directors and executive officers, as well as a major shareholder, Atai Investment Group Limited. These agreements mean these individuals have committed to voting their shares in favor of the merger. They also agree not to sell their shares into other restrictions, which helps Eli Lilly feel more confident that the deal will close. This section is primarily about making sure all investors get the same information at the same time. Attached as an exhibit is a press release from the 16th of July 2026 that jointly announces the execution of the merger agreement. This is important because it tells the public that the deal is official, subject to the approvals we talked about. This is where the official documents are listed. The core of this filing is the Agreement and Plan of Merger, which is Exhibit 2.1. There is also the form of voting and support agreement as Exhibit 10.1 and the joint press release as Exhibit 99.1. Think of these as the official contracts and public announcements related to the deal. This part is a standard legal disclaimer. It basically says that this communication is just for informing people, and it is not an attempt to sell you any stock or ask you to vote one way or another about the deal. They are also telling you where to find more detailed information, like the proxy statement that will be filed with the Securities and Exchange Commission, or SEC, for shareholders to review and vote on. Here, Atai Beckley Incorporated is telling shareholders how they will get the details they need to make an informed decision about the merger. They will be filing a proxy statement, which is a document that explains the deal in detail and asks shareholders to vote. You can find this document on the CC's website. and also on Atai Beckley Incorporated's investor relations website. This is where you'll get the full picture before you have to cast your vote. This section explains who might be considered as participants in asking for shareholder votes. It generally includes the company's directors and top executives. The filing points you to previous reports like proxy statements and annual reports to see who these people are and how many shares they own. This is a standard disclosure to ensure transparency about who is influencing the shareholder vote. This is a very important section for anyone looking at this deal. It's basically a warning that many of the statements made in this document speak about the future, and these future predictions are not guaranteed. Things like the exact timing of the merger, whether all the conditions will be met, and especially the payout of those CVRs are all subject to significant risks and uncertainties. They list many potential problems, such as shareholders not approving the deal, regulatory hurdles, or even unexpected outcomes in drug development. It is a reminder that while a deal is announced, it is not a done deal until all the I's are dotted and T's are crossed. And even then, the future success of the acquired company's products is not guaranteed. And here we have the signature. Srinivas Rao, the Chief Executive Officer of Atai Beckley Incorporated, signed this report on the 16th of July 2026, confirming the information provided. So what is the story here? Eli Lilly, a major pharmaceutical company, is buying Atai Beckley Incorporated. For shareholders, there is an immediate cash payout of $6.75 per S-hair, which seems decent. However, the real value could lie in those contingent value rights, the CVRs, which offer up to an additional $2.5 per share if Atai Beckley Incorporated's pipeline drugs hit specific clinical and regulatory milestones. This structure is common in biotech deals where future drug success is uncertain. It is a way for the acquiring company to share the risk and reward with existing shareholders. The risk I am watching is the uncertainty of those CVR payouts. Hitting clinical and regulatory milestones is notoriously difficult in the pharmaceutical industry. Companies can spend billions and years on a drug only for it to fail in late-stage trials or not get approved. If those milestones aren't met, the total payout for Atai Beckley Incorporated shareholders could be significantly less than the headline full value. Remember, historical comparisons for companies that have received a buyout offer can vary wildly, but generally, the CVRs become the main focus for additional upside. If you look at other deals with CVRs, sometimes they pay out, sometimes they don't. And the market often reflects this uncertainty in the company's stock price before the deal closes. In this case, the $6.75 cash is a flaw, but the market will be watching closely to see if those CVRs can be achieved. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.